Hello, and welcome back to the Accounting Podcast, your source for news in the accounting profession. I'm Blake Oliver.
And I'm David Leary.
And it's November, David. The government shutdown is officially the longest in history, but it looks like it's about to end, which is great news for tax season.
Well, I think the shutdown got real this weekend. I know my wife tried to fly to San Francisco and got to the airport and it was just delayed. The flight just kept being delayed. She just said, forget it, because she didn't want to get stuck somewhere else. Yep. Just got her money back and went home.
And you tweeted.
Yeah, I tweeted
about
that.
You said like, if you're at the airport, just go home, I think is what
basically.
Yeah,
just get your money back and
tweeted.
Go home. Just get a refund and go home.
And somehow this tweet got over a million views. I don't understand it.
People are freaking out over it. It was like the dumbest blurt of a tweet I've ever done. It just got exploded. It makes no sense. But yes, the government shutdown's real, right? It's affecting real Americans who are just trying to go about their pre-holiday travels, right? Yep. I mean, this is in theory, because the holiday tomorrow, so it's an extra long weekend, right? People were impacted by it.
Well, you know what? Since we started out with the government shutdown, I want to play a little video. This is an interview with an IRS lawyer who's been on furlough since the shutdown started, and it's on Instagram.
Wait,
and
is this the hot dog guy?
This is the hot dog guy. Yeah, the hot dog stand guy. You saw this?
No, but I heard about this guy. I know he exists.
All right. Well, here it goes. I'm going to play this, and then we'll thank our sponsors.
Selling out every day. I've said this before, but if I can make one person laugh or smile with my shtick and menu, that makes me really, really happy. Hi, my name's Isaac Stein. I'm 31 years old. I live in DC. I'm here at my hot dog cart, Shysters, operating it in full swing. It is an ironical play on the fact that I'm a lawyer. It was originally intended as a weekend project, but since I've been furloughed on October 8th, I've been operating it most days. There's been a tremendous outpouring of support from the community, and I've been meeting tons of interesting people each day. The correct hot dog is with mustard and sauerkraut. That is me simply saying that I think that's the best tasting hot dog. I've been doing it pretty much all myself. I'll get to my kitchen before noon. Okay. Then the prep in order to actually, like setting up the condiments and stuff, takes like an hour. I'm vending for as long as I'm actually vending. Condiments get on absolutely everything, including my suit. The cleanup is at least 3 hours a day minimum. Wow. So there's a lot of back end cleanup. I will always be at the corner of this corner, First and M. There's a specific permit called a sidewalk permit, and it's tied to this location. DC is full of really phenomenally accomplished, interesting people, and I have the privilege of getting to talk to them on a daily basis.
So there you go. That's Isaac, IRS lawyer, operating a hot dog stand while he's on furlough. Hopefully he won't be for very much longer, because it seems like the shutdown's about to end as we record this on Monday, November 10th. We'll talk more about that. But David, first, let's thank our sponsors.
Yeah, our sponsors this week, we have Relay, Bill, and Cloud Accountant Staffing. So between Blake and myself, we now have 3, 4, 5 business entities, 20 or so checking accounts, dozens and dozens of virtual cards. It would be impossible to manage all of this if we weren't using Relay as our small business bank. Relay is truly part of the tech stack we use to run our businesses. Relay allows Blake and I to each have our own logins. We can grant access to our team and even our accountant without sharing passwords or two-factor authentication codes. Relay allows us to grow and scale our banking needs without ever going to a physical branch, and I recently added an account to receive inbound merchant services with just a few clicks. And I had to create a payroll checking account, again, just a few clicks. And instantly I have access to my ACH info to give to my payroll provider. With Relay's virtual cards, we can issue debit cards to our team around the world for their needed business expenses. I can instantly spin up a new Visa debit card, set both daily and monthly spending limits, and when the team member doesn't need their card, I can freeze it until they need to use it again. Relay also has an automation feature to sweep money automatically from one account to another based on dates, amount or target balances, or percentages. For example, inbound payments could be split daily to your payroll, sales tax payable, operating, and savings accounts, all based on predefined rules. To learn more about using Relay for your firm and clients, head to accountingpodcast.promo/relay. That is accountingpodcast.promo/RELAY. Thank you, Relay.
And thank you to our live stream viewers who have joined us on this Monday morning. It's a little light today. I mean, it's a Monday. Everyone's getting their work done. BJJ Glute says 3 coffee emojis, and I think it just got enough votes to pass officially in reference to the government reopening bill. I brought a story to the show from CPA Practice Advisor about how this is the longest government shutdown in history. At the time of the writing of the article, it was November 5th, and it was 36 days. So I guess we're now on to 40 or 41 days.
I think we broke 40. I think that's official.
Okay. And it's been costing the U.S. economy around $15 billion every single week. The Congressional Budget Office projects that Q4 economic growth could drop by 2 percentage points as a result of the shutdown. If it extends through Thanksgiving, which it won't be, then approximately $14 billion in economic damage would be permanent. But hopefully, with this reopening, it won't be. That money will get into the paychecks of federal workers, who will then spend it into the economy. And also, people won't be canceling their trips. They'll still be going. 650,000 federal employees have been furloughed without pay. And I guess now that those furloughed workers are not... the furloughed workers are counted as unemployed when they're furloughed. So we're going to see a jobless rate spike to probably 4.7% in October. It was 4.3% in August. The ripple effects are that this money from the federal government is not going into the private economy. $24 billion in federal spending on goods and services was suspended in the first month of this shutdown. And the impact on small businesses is significant because the Small Business Administration has been unable to process $2.5 billion in loans for 4,800 businesses, and that was as of October 21st. Additionally, 42 million Americans on SNAP, the food stamps program, were receiving only half of their benefits for November after a court order. 8,000 children and families lost access to Head Start daycare and education services. So that's the impact then, on services for needy families and individuals. But yeah, looks like it's going to be ended now that it was a handful of Democrats in the Senate who have broken to vote with Republicans to reopen the government. The Democrats were trying to secure an extension of Affordable Care Act subsidies to prevent premium hikes for 24 million Americans, but it looks like they failed to do this. So we had this government shutdown, and the Democrats didn't get what they were looking for.
Yeah, they say it's going to be whatever the original offer was. They're just saying yes to that now, basically they're trying to get the shutdown to stop.
Yep. And, I think this is something that I guess it's the Thanksgiving travel. That's why this always happens this time of year, because everybody knows that travel is going to get disrupted, and so then it's like a game of chicken. Who's going to blink first? And Democrats blinked on this
because all the senators and representatives take off for Thanksgiving weekend and head back home to their constituents.
That's right.
And they don't want to be stuck in airports either.
All right,
or
David.
even take those meetings with their constituents.
That's right. We got lots to talk about. In addition to government shutdown news, we've got news about tariffs. The Supreme Court has held a hearing, oral arguments on tariffs, and it's looking like they might hold against it. Trump's tariffs might get struck down, which would be a huge deal. We've also got information about First Brands, which is that company that BDO was auditing that failed or went bankrupt, and without a going concern warning. And I guess the First Brands founder has been accused of looting the company of hundreds of millions of dollars. I want to talk about that. The NASBA has a white paper on private equity in accounting firms that we can go through. They've got a task force working on it. You have some news about Intuit, right, David? Let's start with that, because we were just talking about Intuit Connect last week. We were just there at the conference. There's something about Intuit is going to open retail stores.
So Intuit is going to open 20 new brick and mortar TurboTax stores. And apparently they're going to be a hybrid online in-person experience similar to Apple's retail approach. So I'm imagining these like stark white buildings with some TurboTax spread around, and you'll have computers and you'll start working on your return, and then you got to get a ticket to go up to some, like, what do they call it? The Genius bar. It'll be like the EA bar, and you'll go up to the EA bar and they'll handle with the question. Then you go back and do more work at your desk.
Wait, is this your speculation, or is
I'm
this
just
what they've said they're
imagining, if
going
they're
to
saying
do?
it's going to be like an Apple store, I'm imagining what that experience could be.
So what do we know about these stores? There's going to be 20 stores, you said? Where are they going to be?
They're going to be
like,
walk-in retail locations that
Okay.
offer guided services from CPAs and EAs. And they specifically have said it's going to be like Apple stores for tax help and support.
Okay. So you walk in and you work on your tax return, your TurboTax tax return. So, and then you get help. You can get help
Because
live.
it's
right there.
hybrid. It's like they're not doing it for you.
Right.
Like it's almost like TurboTax Live, but instead of getting the video pop up, you'll just walk over to the Genius bar and get help.
Interesting. Okay.
It's kind of strange. And they also announced they are adding an additional 200 TurboTax expert offices. So I'm assuming what these are, because it's not really well defined, because they already have 400 of them. These would be like if you're doing your taxes online with TurboTax Live and you need to go visit or make an appointment with somebody, these would be localized tax expertise within 50-mile radius of wherever you're at. So but all of this comes under the umbrella of how convenient this week. I don't know if you saw, the IRS is officially killing Direct File.
Yes, I saw that. It was only running for 2 years, and they are shutting it down despite it having a 98% user satisfaction rate.
Yeah. And the argument of the Trump administration is the private sector can handle electronic filing more efficiently. Treasury Secretary and IRS Commissioner Scott Bessent said that the program wasn't used very much and said the private alternatives are better. But the reason it wasn't used much because it was a pilot. They were still just rolling it out. It wasn't marketed or advertised. It was really still brand new of a pilot.
Yeah.
And obviously this comes after
12 states. In the second year, it was in 25 states.
Yeah.
But it's being shut down. How many returns did they file? It was close to 300,000 returns were filed through the system in 2024 in its first year.
Yeah, almost twice as many. So 140,000 in 2024, 300,000 in 2025.
Okay. Got it. 300,000.
Which is it's someplace. It's a significant number in the grand scheme. If that's 300,000 paper returns the IRS doesn't have to touch, that's a victory. But all of this really came, from on the back of tax prep companies like Intuit and H&R Block lobbying against this, and then criticism from Republican lawmakers. We predicted this. Our episode in June 2024 was Intuit would go red in the election, and then they did it. They donated $1 million to the Trump inauguration, and this got killed. It is dirty and gross, and it really grosses me out because I think it's just reeks of hypocrisy on both sides. Right? Intuit compromised its own values just for the almighty dollar of getting a TurboTax competitor eliminated. And arguably, MAGA and the Trump Republicans turned a blind eye to what they would consider as a woke company. Intuit was one of the first companies to offer same-sex marriage health benefits. Right? Intuit, I'm pretty sure in the sex change operations and gender change operations, Intuit allowed that under their insurance. This is not the type of company that the MAGA people are pro, but everybody turned a blind eye as soon as $1 million came in to pay for the inauguration party. And then Intuit got exactly what they wanted. It just reeks of grossness. It's really gross. I hate it. I feel bad for Intuit employees that this is the company they work for. It's gross.
Speaking of the IRS, Democrats are investigating the new IRS CEO's past role at Fiserv. David, you mentioned this on a previous episode that instead of appointing an IRS commissioner, the Trump administration has come up with a workaround for appointing a new head of the IRS. They hired a CEO, not a job that you have to get confirmed by the Senate to perform. And so the new CEO is Frank. Do you know how to say his last name, David?
I'm going to get my Italian on here.
Bisignano, I think. Frank Bisignano. He's the new CEO of the IRS, and he was previously involved in a company called Fiserv. And Fiserv shares tumbled in late October after the company slashed their full-year earnings outlook and delivered Q3 results well below analyst expectations. Bisignano exited from Fiserv but he exited from Fiserv to join the Trump administration in May of 2025, and he owned approximately $594 million in Fiserv stock upon his Senate confirmation. He then sold those shares between May 16th and July 1st for about $530 million and avoided $300 million in losses by selling before the October downturn. So now Democrats are asking, well, what did you know and when did you know it?
Yeah, they're possibly implying that he had inside information that the stock price was going to fall, but he really had to divest because he was nominated and accepted the nomination to be the commissioner of Social Security. So that's where he was first before they moved him to CEO of the IRS. But the interesting part of this is like, as soon as you have to divest from your stock when you take a government position like this, you basically avoid the capital gains, and you could basically go the rest of your life without paying the taxes on this gain. So he had a huge gain that he may never pay taxes on, depending on where he put that money when he divested it.
Oh, right, because you get a tax break. So if you are a presidential appointee and you have to sell your stock, if divest, like you said, then you don't have to pay capital gains.
The spirit of this makes sense, right? You want to eliminate conflict of interest, but I don't, they're not appointing a schmuck like me, right? They're appointing a guy that has $500 million in stock profits, right? Now he doesn't have to pay capital gains on this.
All right. Well, let's see. What else do we have in news? Tax news. Here's a random story. Trump has pardoned baseball legend Darryl Strawberry on tax evasion. This is a charge from 30 years ago. Darryl Strawberry pleaded guilty in 1995 to underreporting over $350,000 in income from autograph shows and personal appearances. He got 6 months of home confinement as his punishment. The White House says he's been sober for over a decade, found faith, and now runs a recovery center to help others. And this fits a pattern of Trump pardoning white-collar criminals, including Changpeng Zhao and former Representative George Santos.
So that's an interesting one because, I think a lot of the other pardons, Trump has something to gain. I guess with this, he gets to get a photo op with Darryl Strawberry. I don't know. I don't know what the gain is on that for him.
We can keep going with IRS news. Congress has passed the IRS Math and Taxpayer Help Act. This is one of the most frustrating parts of dealing with the IRS. This new act requires the agency to actually explain tax filing errors clearly, including which specific line caused the problem and how to fix it. So the current situation today is the IRS will send you a letter and they'll say, we found an error and we corrected it, and now this is the adjustment. But they don't tell you all the details of what they did and why. And so now they have to do that. So they have to tell you exactly what went wrong. They have to tell you exactly how much you owe. And there's also now multiple ways to dispute errors. You can dispute them by phone, online mail, or in person. And it sets up a pilot program for certified mail notices. So
assuming all of those options are fully staffed by the IRS.
That's
those
right.
would all be great options.
That's right. So the AICPA strongly endorsed this legislation. The AICPA also wants a safe harbor for reporting tips and overtime pay. This is not law yet, but this is what they're working toward. So remember how Congress passed tax breaks for tips and overtime pay?
Yeah.
Well, there's a problem with that. The 2025 tax forms don't have fields to report that information, the amount of wages from overtime pay, the amount of wages from tips, and the IRS says they're not going to change the forms for 2025. So employers don't know how to report it, and taxpayers don't know how to claim the deductions that they're legally entitled to. And the AICPA is asking the IRS to accept alternative documentation like pay stubs, letters from employers, taxpayer tip sheets.
AI generated images.
It's just crazy to me that the IRS is not going to adjust these forms because, we have this now, this tax deduction, but how are taxpayers supposed to claim it? How are they supposed to substantiate it?
I think this is one of the first things we heard from Billy Long. When Billy Long started talking to the IRS employees before, they sent him off to, is he in Iceland? Is that where they sent him off to?
Yes.
To get rid of Billy Long. It was, he was kind of was saying that they're not sure they can implement all the changes in the big, beautiful bill. Like there's just too many changes. How do you roll that out? How do you change every tax form? And obviously that wasn't an acceptable opinion to have. And, he's gone. I want to make sure I summarize the story correctly. So the AICPA is suggesting that the IRS allows alternative ways to document this to get it.
Right, yeah. Like we should be able to use a pay stub that shows the amount of overtime wages instead of a W-2 because the W-2s aren't going to have a box for it. So
makes sense.
This is the sort of like common sense legislation that we need, but here we are dealing with a government shutdown instead. Like this is the stuff that Congress needs to be working on. Otherwise, we are going to have a disaster in January, February. So, David, where do we go next?
Well,
tariffs.
This is still government related. It's still tariff related, but apparently now they're saying we might be getting a 2000 tariff dividend. It's on its way.
Okay, before you do that, let's thank our next sponsor, and that is Bill. Accountants, you really do it all. You don't just crunch numbers. You steer strategy, shape growth, and help businesses stay strong through change. This International Accounting Day, Bill is celebrating you. Bill is the all-in-one financial operations platform built for accountants, powering them for nearly 2 decades. From AP and AR automation to spend and expense management, Bill helps firms streamline the back office. Bill has watched the evolution from spreadsheets and late nights to scalable firms filled with smart processes, steady growth, and clients who rely on accountants for more than just bookkeeping. And to celebrate International Accounting Day, Bill is hosting free, insightful CPE webinars. November 11th is Practice Transformation, Rethinking How You Work, and November 12th is Business Strategy, Planning for Long-Term Success. You'll earn 1 CPE credit for each webinar you attend. Bill is here to make the year ahead brighter, easier, and more rewarding than ever. And Bill wouldn't be Bill without accountants. You power businesses, and Bill powers you. That's a reason to celebrate. Don't miss out on the free webinars this week of November 10th. Register now. To do that, head over to accountingpodcast.promo/Bill. That's accountingpodcast.promo/BILL. All right, David, tell me about this. What is it? $2,000 I'm going to get?
The
tariff. I want my tariff
dividend.
money.
Right. So on ABC's This Week, Bessent suggested the payment. This is where it's confusing. Like Trump makes it feel like everybody's going to get $2,000 checks. But the way it's being explained is it could take the form of reduced taxes on tips, overtime, and Social Security income, or new deductions like auto loan interest. So they're
Wait. But they already passed the overtime and tips.
Yeah, so
deduction.
they're going to try and give the $2,000 somehow using the already included policy bill. Like,
Well,
I don't know how they're going to do it.
Is that basically saying like we're already giving you, like
that's the way I read it? Yes, like you're getting the 2,000 because look at all these things we put in the bill.
I see.
Or they're going to pull a lever like, oh, we have the freedom to adjust auto loan interest or allow an auto loan interest deduction, which you can't do, of up to $2,000. It's not really clear, but it's marketing, right? Everybody's going to say like, oh, look, we're all getting a tariff dividend. And then when push comes to shove, when you do your taxes, you might not actually get one, but everybody's going to think they got one because it's not like a stimmy check. We're not going to get our $2,000 in the bank account. So it's confusing how they plan on doing it other than using the existing bill, which is very strange.
Well, my bet is it's not going to happen because I think that these tariffs are going to be ruled unconstitutional by the Supreme Court, which started hearings on the tariffs on Wednesday. The case is a toy company versus the Trump administration. It's an educational toy company near Chicago run by Rick Woldenberg that employs 500 workers with about 250 plus million in annual sales. And they are going to be paying, it's a real mid-sized Main Street type of business. They are going to be paying an estimated 20 to 30 million in tariffs this year. and that's up from 2.3 million. So their tariff bill has gone up more than 10 times as a result of the Trump administration's policy change. An example is that their Bubble Plush Yoga Ball Buddies product was hit with a $50,000 penalty when a shipment arrived 6 hours late because they missed the window to get the shipment in before the new tariffs went into place. Why are they paying such incredible tariffs? Well, it's because the tariffs on China jumped to 145% in April. The company tried to shift manufacturing from China to India. Trump then reduced China duties and raised India tariffs to 50%. And so the company just can't win. The Trump administration claims authority under the 1977 International Emergency Economic Powers Act to regulate trade and therefore to unilaterally impose tariffs without congressional approval. They cited the national trade deficit and the fentanyl crisis as emergencies. And so the challengers representing this toy company are saying that the Constitution vests tariff power with Congress, not the president, and that tariffs are taxes on American importers requiring congressional authorization, and that the Emergency Powers Law doesn't specifically mention tariffs or taxes. So while the president could, theoretically, under this act, stop trade completely with a country due to an emergency, he can't implement a tax in the form of a tariff on American businesses importing goods. And the coverage of the Supreme Court hearings seems to indicate to me that the Supreme Court is skeptical of the Trump administration's arguments. There were 3 hours of oral arguments, and Chief Justice John Roberts said that tariffs are an imposition of taxes on Americans, and that has always been the core power of Congress. Neil Gorsuch expressed alarm at the administration's broad interpretation. He asked, quote, "What would prohibit Congress from just abdicating all responsibility to regulate foreign commerce, or for that matter, declare war to the president," unquote, which is, I think, an argument that is, very powerful. If this act allows the president to now tax American companies without an act of Congress, that's the Congress delegating its powers to the president, which it is not allowed to do to that extent under the Constitution. And the point of that is to prevent us from having a king or an emperor or a dictator.
So under that act, the president could say, we're not doing any more trade with China and just turn it off, and that's okay. What's not okay is saying we're going to add tariffs and play games with the numbers and the import taxes and all that.
That's right. And it really has to be an emergency. The court has to agree that it's a true emergency. And the issue here, the question here is whether or not persistent trade deficits that have gone on for decades count as an emergency under the act. Or fentanyl counts as an emergency that would qualify for shutting down trade. So there's kind of 2 questions here, right? The first is, what is an actual emergency under this act? And then the second question is, going back to the first one, it's what is an emergency and who gets to decide what that is? Can the president say that anything is an emergency, or will the court narrow the scope of that? And then the second question is whether or not tariffs count as an appropriate response. Is that within the scope of the president's powers under this act? So basically the conservative justices, liberal justices across the board expressed a lot of skepticism in the oral arguments. If ruled unconstitutional, the decision could force more than $100 billion in refunds to American just American businesses in general. So that would really screw with the budget this year, that's for sure, because the tariffs have raised a significant amount of revenue. And a ruling could come as quickly as the end of the year because the Supreme Court has accelerated the timeline of this because of the impact. So there's been a bunch of different tariffs under different acts. So this wouldn't eliminate all of them, but it would prevent the Liberation Day tariffs. Those would be
which were the big
eliminated.
ones, right? Those were the 20 to 50% ones. So you did it.
Yeah. This article says 10 to 50% taxes on most U.S. imports, depending on the country, with separate tariffs on Canada, Mexico, and China for the fentanyl trafficking. So that would be eliminated. And the name of this doctrine that is like central to this case is the major questions doctrine. It was the same legal rule used to thwart Biden's expansion of presidential power in his administration. It requires explicit congressional authorization for sweeping economic actions. So Chief Justice Roberts said, quote, "The justification is being used for a power to impose tariffs on any product from any country in any amount for any length of time. It does seem like that's major authority," unquote. So the Chief Justice seems to think that what the president is doing falls under the major questions doctrine, in which case it would need congressional approval.
Because you could argue that it's messing with the purse. It's messing with, you're pulling the budget levers, like how much money's coming in. That's not the president's job. President's job.
Right. Congress has the power of the purse.
Yeah,
we all learned this in civics class, right? That's like one of the major concepts.
And we learned it like crazy when Biden tried to forgive the student loans. If this was beaten to our head, who controls the purse? It was beaten into our head.
Exactly. All right, David, I'll let you decide where we go next.
I have a couple of AI stories. Are we allowed to touch
AI agents wasting money on scams online?
Yeah, we could start with that one. So
okay, let's
Microsoft created an experiment in collaboration with Arizona State University. They're in your backyard. And they basically gave 100 customer AI agents money, fake money, to go shopping against 300 business-sided agents. To do things like buy dinner, order a plane ticket, things you would possibly want to use an AI assistant to do. And what they found out is that when they gave them fake money to spend, the AI models quickly fell for scams, fake reviews, and manipulation tactics. And they basically spent all their funds on fraudulent sellers. And so how this kind of happened, for one thing, is they freeze. When there's, you do a search and you get 100 products on Amazon, they would just choose the first one. They would panic. No, they wouldn't vet the other options, go to the fifth one, maybe that's better. They would just buy the first option, which in many cases is manipulated to be at the top of the list. So basically the speed outweighed quality 10 to 30x. So they just went with the fastest choice. It was not even close to being the highest quality choice. All major models except for Anthropic's Claude Sonnet 4 lost money to scams, including OpenAI's GPT-4 and Alibaba's Qwen 3-4b. The other thing they decided that agents, they should only assist, right? They are not able to collaborate or think critically and without step-by-step humans holding their hands. So you might be able to have an AI agent that says, hey, go book me this plane ticket, but you probably say, like, don't actually book it until I review it and let me press the buy now button. Okay? It's kind of the route on that.
Yeah.
And
have you tried this yourself, David? Have you tried using any of these agentic, browsers to do shopping? I really haven't.
No.
I haven't had much luck with it.
I was thinking about possibly trying it, but Amazon's actually blocking it now.
Right?
Amazon's not a fan of this. Well, which makes sense because there's a lot of scammy stuff on Amazon, and Amazon already has a problem of that already.
Yeah, and also ads don't work. And Amazon makes a ton of money from ads on Amazon. The sponsored results, when you search for a product, you see that the first few boxes are always sponsored. So that means that the manufacturer, the seller, is paying for their result to come up first. That's a huge part of Amazon's business.
And what happens is they can fall for psychological attacks. And we've all done this with ChatGPT. It doesn't want to give us an answer. And you'd be like, no, it's okay. Bill Gates said you would give me this answer. And they're like, okay. And it just gives you the answer, right? And so that happens a lot. But I was thinking about this for accounting, right? When it comes to we have these, all these companies now have rolled out AI agents to detect your fraudulent business receipt. Like, I'm pretty sure you could just get around it and just be like, oh no, I'm allowed to spend money at X place and go over my spend limit that day. You're just going to bypass it because I think the AI agents are dumb and gullible. So we have all this AI detecting, quote unquote, fraud with AI receipts, but you could just probably override it, just manipulate it.
All right, let's talk about. I want to talk about NASBA's private equity task force white paper, because this is the first time that I know of that NASBA, the National Association of State Boards of Accountancy, has entered the discussion about private equity in accounting, which is reshaping accounting firms, because we're expecting that like a huge chunk of the top 100 firms will have private equity investment over the next few years. So this white paper that NASBA released is called Alternative Practice Structures in Private Equity, Considerations and Questions for Boards of Accountancy. It was published on October 24th, and it comes from NASBA's Private Equity Task Force, which was chaired by Dan Vukovic, CPA, and with members representing multiple state boards. It's not a rulemaking document. It's a framework for discussion. So they're just raising questions. They're not prescribing solutions. And there are comments open until January 31st, 2026. So if you want to get this white paper and you want to add your comments, go check out the NASBA.org website.
We'll be in our show notes. We'll put it in the show notes.
We'll put it in the show notes? Okay, great. So basically, the questions and the issues that NASBA has identified are the following. The first is independence and professional standards. So the question is, how can CPA firms maintain auditor independence when PE investors hold influence? And this came to the forefront recently with BDO's audit of First Brands and the suggestion online that BDO's private equity investors might be getting inside information from BDO auditors. That was the unsupported allegation online. Going Concern reported on it, and then BDO sent a cease and desist to Going Concern and threatened to sue the publication for reporting on this, for insinuating or implying that BDO had done this.
But I don't even think the risk is, yes, you don't want accountants at BDO passing information directly to the PE side of the business, right? But I think it could just happen on accident. Like, oh, there's a spreadsheet, there's a file on a Microsoft Drive somewhere, somebody stumbles upon it. Look at the great information in this file. Like I don't think it's purposeful behaviors that it could be. I mean, that's really dirty, but I think it's going to be just carelessness that occurs. Like the opportunity is too sweet for the PE company not to click around and browse through drives and see if they find a document and gain information.
In my mind, it doesn't even matter. It doesn't even matter whether it's accidental or intentional. It's simply that the opportunity exists.
Yes.
And the incentive exists. So the private equity group, there was a private equity group that was shorting the stock of First Brands. BDO was the auditor. Private equity also had loaned BDO over $1 billion. So people online, on Twitter, on Reddit, in the investor community, made the connection and made the allegation or insinuated or implied that there could have been information passed inappropriately.
And I think they even used
could have been
the words like audit independence. They were calling out independence and audit.
Right.
Yeah.
And Going Concern reported this. BDO took great offense, sent the cease and desist, and then the story kind of like got even bigger as a result, and we talked about it. And I've been thinking a lot about this, especially now that NASBA is looking into private equity. And the issue to me, the core issue to me, is that auditor independence needs to not just be in fact, it needs to also be in appearance. If there's any appearance that auditor independence has been compromised or could be compromised, then that's a problem that needs to be addressed. And I don't see how you can have private equity investment in firms that do audits and maintain the appearance of independence and objectivity, because money creates an incentive, whether it's debt or it's future gains, investment. When you have like a parent company, like a PE company that owns an accounting firm or owns the debt of an accounting firm, and they also have investments in firms that are being audited by that audit firm, that's a connection that to me just inherently harms independence.
And to be clear, it wasn't a loan. It was a loan that was quote unquote causing financial stress to BDO, enough where they had to lay off employees. So that's a whole, and renegotiate the interest rate. So this is not just like, oh, it's a loan and the money's there. This is like creating financial stress, which is, that really opens the door for opportunity even more.
So the AICPA, their ethics committee, is working on new independence guidance that should come out soon. And NASBA is asking whether states should go farther than the AICPA standards to protect the public. They asked the question in this white paper, should firms have to clearly disclose which parts of their organization are CPA owned versus PE owned? And that goes to this alternative practice structure where you split off everything but the attest, but the audit function into a separate non-CPA firm entity, and the non-CPA entity takes the private equity investment, but the CPA firm, which is now just doing audits and attest work, has the same name as the non-attest firm. So BDO did this. All the big firms that have, most of the big firms that have taken money have done this in order to get around the independence rules. But in the eyes of the public, they don't know there's a difference. Like nobody, I actually be curious if you did a survey, like how many customers or clients are aware that there's even this structure in place. And the non-CPA entity provides management services of the attest firm. So like, that's a big question is, how do you disclose this? I mean, if you ask me, the only way to make this really clear would be if the attest firm just didn't have the same name as the non-attest firm. Like that's, in my mind, that's the only way that you can actually make it like crystal clear. They shouldn't have the same website. They shouldn't have the same name. It should be totally different. But then you have a problem where, well, does that just like narrow the scope of what a CPA firm is to the point where we're almost, irrelevant? Like it's shrinking the CPA firm to just this one function. And as a profession, we don't want that. I think in general, we want the CPA to represent audit, tax, consulting, anything to do with the numbers, right? Finances. Like we don't want to just be about a test. So all of this, like all these workarounds to eliminate the independence issue from a legal perspective have actually ended up over the last decades potentially shrinking what a CPA firm is. So like that solution though, like could hurt, while it might solve the problem of the appearance issue, it hurts the profession, right? Individual CPAs would be hurt by that because
all that's left is the commodity part that it's like a race to zero from a revenue standpoint. It's the piece of the business nobody wants. Everybody has to buy. That's all it's left.
And it's not that nobody wants it. It's like audit is a important, very important part of the profession, but it's not the biggest part, and it's not the only part.
Yeah.
And so we don't want to just be that. So it's like a really challenging problem to solve because we have all these firms that have set up this alternative practice structure, and we want to fix this problem with the appearance issue, but then we also don't want to, I don't know what the word is, or we don't want to like shrink what it means to be a CPA.
So going back to this doc, so NASBA created this PDF. How many pages is this? How big is this document?
Let's see here. It's about 15 pages.
About 15 pages. And the purpose of this then is to provide an outline for states to go, hey, states, go you figure out this on your own. Here's some guidelines and ways to a framework to have meetings about this at your state level.
Well, yeah, it's designed to get states thinking about this beyond just what the AICPA is doing. Like, and I think the issue with the AICPA is that often like the rulemaking, the AICPA is heavily influenced by large firms, and they don't want anything to change because they've spent a lot of money and time setting up these alternative practice structures to get around these rules. So it's the states that may have to take the lead on this, just as with the 150-hour rule, in order to make change happen, because it's the state regulators, right, that actually have the power to do something, but they need to act together and do something similar, or then they create all these problems for firms that are operating across state lines.
But
So
and the difference is there's going to be lots of money lobbying against these changes versus the 150-hour rule. They got to just make the changes, pass the laws, and move on. There was nobody spending money to prevent that from happening. And as soon as a state goes down this journey, outside money will be coming in to influence those legislature.
So this is really it. Like, this is where we are getting to the point where private equity is now creating this challenge for the profession when it comes to our integrity, our ethics, our objectivity. And we as a profession are going to have to decide, do we take a stand, or do we allow private equity to continue to take over accounting firms, and ultimately, when they have enough influence, control the regulatory apparatus and really then have control, David? Like, I don't know if you've talked about this on the show, but we've talked about this privately, that is your fear.
That's the next step. Like once you control the means of production, you want to control the governing bodies of the means of production. You control it, because that's what PE does. They take over the whole thing, all parts of the equation. That's where the value chain is. Let's just buy all parts of the value chain, and they're gonna come after these organizations or compromise them, right?
Yeah.
Somehow.
Yeah, and my concern is that it's just simply like, I don't know if there is a solution to the problem of private equity, of outside money in accounting. Can you actually maintain independence in the ownership of an accounting firm and the management when there is all this money from outside coming in, money that is not controlled by CPAs? And it may not be possible, but I'm glad we're asking the question.
We should do our next ad and then jump on to some other stories.
Let's do it. Our next sponsor is Cloud Accountant Staffing. You want to take this one, David?
Yeah. If you're thinking about increasing your team using remote team members, but you can't afford, you want to avoid the high-pressure sales call and commitments before you even review possible candidates, good news. You can now review potential candidates without having to get on sales calls or make any commitments. Cloud Accountant Staffing has just launched their new candidate portal where you can browse resumes, introduction videos, view test scores and test results for assessments and personality at any time, day or night. No sales call, no pressure, no commitment. The candidate portal is updated daily, and all the candidates are available for an interview within 24 hours. You can browse candidates by both roles and experience. If you want a bookkeeper who knows QuickBooks and has expertise in nonprofits, you can drill down to find those candidates. How different would your firm look in 2026? And honestly, how different would your life feel if you could instantly add 40, 80, 120 hours of extra capacity every single week to your firm? To explore the new Cloud Accountant Staffing candidate portal, head over to accountingpodcast.promo/CAS. That is accountingpodcast.promo/CAS.
All right. So, David, if you'll indulge me, I want to follow up on this private equity discussion, and the BDO audit of First Brands, because there's more news about that, more scandalous news. So, taking a step back, I'm not sure how well I summarized it, so I want to do it one more time. I'm going to try again. Okay, so BDO was the auditor of First Brands. They signed off on First Brands financials in March, showing $5.23 billion in debt. This is according to a Wall Street Journal report. 6 months later, First Brands collapsed into bankruptcy, with restructuring advisors finding $11.63 billion in total obligations. So the financials showed half as much as there actually was in terms of total debt. $2 billion of investor money is simply unaccounted for. So the audit missed massive off-balance sheet debt from sketchy factoring arrangements. That's where you sell invoices, like you invoice factoring, David, right? You
Yeah, if you invoice for $1,000, somebody will buy it from you for $700, so you get the cash right away.
And
But
then
they're going to go collect the $1,000.
and then when the
That's profit for them.
$1,000 comes in to pay the invoice, they get it. Yes.
But I don't even think it's that good of a deal. I think it's like much lower. It's pennies on the dollar. I don't think it's a great deal.
So First Brands was doing sketchy factoring arrangements, right? They were selling invoices to financial institutions. They would then collect payments from the customers, but apparently they weren't passing the money along to the financial institutions that loaned it to them. They had 2.3 billion.
So they sell the invoice to Blake. They sell you the invoice. In the meantime, the customer paid me, so I just keep the money, and then maybe you'll collect the money, but I already got money from you.
Well, no, the way it works is like First Brand still collects the money, but they're supposed to remit it when they get invoice payment, because they got paid up front through the factoring arrangement.
But it was more like a loan. They really didn't sell they just took a loan on the invoice. Okay.
Right. So Wall Street Journal is reporting they had 2.3 billion in unpaid balances, backed by only 347 million in actual receivables. So what's that, like a 7 times discount? They had like 7 times more unpaid balances, but they had only, so over 2 billion unpaid balances that they owed to these factoring companies, backed by 347 million in actual receivables. So there's something fishy going on here. BDO says they weren't hired to audit these entities tied to most of the off-balance sheet financing. But like this is to the point where it's like, how could you miss this? Like it, right? So that's the Wall Street Journal coverage of this, and that was as of October 31st. So Halloween, that story came out. Then I see another story here in Accounting Today. The First Brands founder has been accused of looting the company. The bankruptcy lawyers filed a civil lawsuit Monday accusing founder Patrick James of orchestrating widespread fraud to secure billions in financing and then siphoning hundreds of millions for personal use. Sales invoices for this factoring scheme, they were inflated by up to 50 times. So an example in this story is that a $179 invoice was inflated to $9,271. So that's how we got to this point where they had these obligations for the factored invoices that were way in excess of the actual accounts receivable. Apparently,
so I claimed to the company providing me financing. Hey, I have this $9,000 invoice, but it's really a $700 invoice. They give me a loan for $9,000. Far less. And then I have really a receivable for $700. Yeah, you can't pay that money back that way. That business model does not work.
Yeah, just straight up fraud. So the allegations are that the founder, Patrick James, sold non-existent or doctored invoices to factoring firms for immediate cash. Apparently, the same inventory was allegedly used as collateral for multiple lenders. First Brands is an auto parts retailer, I believe. They use special purpose vehicles for off-balance sheet financing without proper records. And there are allegations of personal spending, and this is always the fun part, okay? So in 2024, the founder spent $500,000 on a celebrity chef, $3 million for a New York City townhouse, $3 million in rent for a single year, $110,000 for a 6-week Southampton hotel stay, and 6-figure personal trainer bills. He also owned 17 exotic cars and at least 7 properties, including homes in Malibu and the Hamptons. Now,
you can argue his exotic cars could be necessary and ordinary. He's in the auto parts business. They have like 17 or 18 brands that falls under this umbrella.
So here's the crazy part, right? There was only $12 million left in the bank accounts at filing, which was at the end of September. And the allegation is that the founder transferred over $700 million out of the business. $700 million before this. And it wasn't even caught. The business went bankrupt.
Because this is over a period of time. Audit after audit after audit after audit after audit. This wasn't like $700 million all at once. It was over a period of 2018 to 2025. So what's that, 7-8 years?
Yeah, so BDO was the auditor from 2020, at least 2020 through 2025. So it looks like 5 years. Yeah. So this is going on for a long time. And at least $10 million was transferred to James's entity, Battery Park Holdings, which is like owned by James, related entity there. It's just, it's wild. Like, I just wonder, like, how could you audit this company and not like be aware of this, right? Like the company has only, you know, I mean, we don't know what it was when the audit report was signed or the audit letter was signed, right, when the audit was completed. But like at the bankruptcy, the company only had $12 million or something like that. So you look at like, just looking at the balance sheet, right? You're looking at like, here's $12 million. Here's all this debt. So cash came in because of the debt. Where did the cash go, right? It's like credit, liability, debit, cash. Now the cash is gone, so we credited cash. What was the expense, right? Where did this go? Where did the money go? And it's a lot. So like this is the sort of thing that in the mind of the public just seems impossible. And to me, as an accountant, seems like crazy. How could you audit this company and not know that something is up? And I guess it's
the argument
possible.
That's not the job, right? Like that's the argument we've heard before. That's not the auditor's job to detect fraud in the company.
Well,
that's what the public thinks your job is. Like that's the only thing they expect you to do is this. This is the number one expectation of what a CPA and audit should do is find this.
So I did a little research on this, and I found 3 core weaknesses that traditional audits have that could have, you know, led to this just being missed by accident, right? So one is over-reliance on management representations. So auditors often request documentation from management itself. They don't go out and get documentation independently. So if management alters invoices, ledgers, or manipulates off-balance sheet entities, then auditors can be deceived because they didn't go out and independently verify this stuff.
Pause right there. That's exactly the problem of those AI shopping cart people. If the AI auditor, we're going to have these AI auditors. Oh, they're going to check everything. They're going to be manipulated by management. They're going to say, oh no, it's okay to have this penthouse. Okay, thank you. And they'll just move on. Like it's the same fundamental problem. The manipulation's going to be there. It doesn't matter if AI is doing it or not.
So the second weakness of traditional audits relating to this bankruptcy or this failure is the complexity of off-balance sheet and factoring arrangements. So in a factoring arrangement, the invoice value is sold to a third party, receivable sold to a third party. So how do you get confirmation of that, right? You're not auditing the third party, you're auditing the company that sold it. So it's hard to follow that. And often these, special purpose vehicles, like entities that are created to hold the debt so that the primary entity doesn't, that can be hard to find, right? It can be hard to like if you're auditing one company, how do you know that this other entity is related? How do you know the ownership?
Just because it's tough cannot be like an excuse. Like it was too hard. The work was too hard, so we didn't really dig in that much. Like no, the expectation is you do it. Like this is why are you working 8 hours a week? What are you working on if you're working 80 hours a week if you're not doing the hard work?
The other weakness, the final one, is scope and timing limitations. So if you're doing audit sampling, you could miss fraudulent entries simply your sampling didn't hit one of those. That seems kind of like, given the scope of this, seems like hard. Like, how could you not find a fraudulent invoice if you were actually sampling them? Or I don't know. But also, it can be difficult if management manipulates the results after the field work is done or uses cutoff timing tricks. So they create the fake invoices or alter the fake invoices near the period end or after the field work has been done. And like that, I suppose, is how I could see the company only having, $12 million when they went bankrupt, but the auditors signed off at, say, the year end because the bankruptcy didn't happen until September. So in 9 months, could the founder have looted the company, allegedly, enough to where like now the cash balance doesn't make sense?
Well, eventually it catches up, right?
Right.
Because you're kiting. You're kiting, right?
Yeah.
Eventually it catches up to you.
And Boring Accountant Life in the chat says auditors don't have control of other entities needed to confirm or deny fraud transactions. And I think that is probably the biggest reason that this kind of stuff happens. Yes, is that like they don't have access. The auditors do not have access to these other entities, and so figuring out what is going on when you only have a visibility into the entity you're auditing is tough when stuff's off balance sheet, when it's in another entity.
So let's just say the other entity was also audited by BDO. Do you have to maintain independence, or you could go to the other entity's auditing team and ask them questions? Like where does it like what's the responsibility to get the truth or to remain this independent?
I think the issue is that when it comes to audit, as a profession, we have created all these rules to protect ourselves. So if I, as the auditor, go through the checklist and I do what is required according to auditing standards, I don't have to step back and take a look at the big picture. And so we don't, because what is the incentive to do that? What is the incentive to find a massive fraud? Especially when you've been auditing this company for 5 years. You think in year 5, somebody figures it out and they're going to speak up? You definitely don't want to find it then, because it's just going to create a massive lawsuit against your firm. Like there's every incentive to look the other way. There's no incentive to find it. It's not like we are like police investigators, you know, or that are hired to find criminals and, you know, out the fraud. We are hired to do the audit and do it efficiently, quickly, get it done so the client
to protect
can
the firm.
file with the SEC, right? So that is like the fundamental issue here. All right, David, I got to go. That's all the time we have for this week. Thank you, everyone who joined us live. If you haven't, follow us on YouTube. Hit that subscribe and notification button. You'll get notified when we go live, and you can comment on any of these stories or chat with us or see what we look like. And you can also earn free CPE for listening to this podcast. Download the free Earmark app at earmark.app. Well, actually, you can just use it in your web browser at earmark.app, but you can also download it on the App Store, and it's free to sign up, free to earn CPE every week. And if you want to support our work, become a subscriber for the low price of $169.99 per year. Get unlimited CPE for listening to podcasts. David.
Now's the time to do it. All of you have that December 31st deadline. Start
Yes.
chop. Let's go.
Come on, don't be doing your CPE all at the end of the year. Don't do it between Christmas and New Year's. You can find more enjoyable ways to avoid your family than CPE. All right, David, great talking with you as always. Thanks, everyone, for tuning in,
everybody.
and we'll see you here next week. Bye.